First become first semester subject fundamentals of accounting. Now I am going to explain about the basic concepts in accounting, that is bookkeeping and journal. The term accounting deals with business. So first we have to know about business. Business is an economic activity that involves the exchange, purchase and sale of goods and services. Here, two important elements involved in business, that is purchase and sale, of goods and services, and motive to earn profits. Yes, purchase and sale are the main economic activities in every business in order to make profits. No business can run without purchase or sale. So we can say that the purchase and sales are the important key elements in every business. The second important element is motive to earn profits. The main object of every business organization is to earn profits. Then every economic activity must be made with a motive to earn profits. So no economic activity without profit motive is called business. And then the next important element in business is continuity. A business is not a single time activity. It is a continuous process of purchase and sale of goods and services. A single transaction of trade is not called business. It is clear that every business having three important features, which are purchase and sale, profit motive and continuity. Next, business transactions are classified into two types, which are cash transactions and credit transactions. What is a cash transaction? Yes, when immediate payment is made, it is called cash transaction. The payment is made in cash or in kind. What is a credit transaction? Yes, when immediate payment is not made and the payment is made in near future, it is called credit transactions. So business transactions are classified as cash transactions and credit transactions. Whether the transaction is a cash transaction or credit transaction, every transaction having three benefits. That is two benefits. That is receiving benefits and giving benefits. Every business transaction having two benefits. That is receiving benefits and giving benefits. The receiving benefit of a transaction is called debit, and the giving benefit of a transaction is called credit. The business transactions are also classified into three types of accounts. Business transactions are also classified into three types of accounts. That is personal accounts, real accounts and normal accounts. First one, what about personal account? The accounts which are related to the names of persons, firms and companies is called personal account. The accounts which are related to names of the persons, firms and companies is called personal account. For example, Krishna account is the name of the person. As bank account is the name of the firm, and Mahesh and Company Limited is a company name. So the accounts which are related to names of persons, firms and companies. Yes, the rule of personal account is debit the receiver and credit the giver. Debit the receiver and credit the giver. Next, real account. The accounts which are related to the names of the accounts which are related to as the assets and properties of a trader or business is called real account or asset account. The accounts which are related to the assets and properties of a trader or business is called real account or asset account. The examples of real account are cash, goods, land, building, plant and machinery, furniture, investments, etc. are the real accounts. What about rule? As debit what comes in and credit what goes out. Debit what comes in and credit what goes out. And then next, the third account, nominal account. The accounts which are related to expenses, losses, incomes and gains is called nominal account. Expenses, losses, incomes and gains is called nominal accounts. Example, rent paid is a expenditure. Rent paid, expenditure. Discount allowed is a loss. Commission received is a income. Discount received is a gain. So one expenditure, rent paid expenditure, discount allowed is a loss. Commission received is income. Discount received is a gain. What about rule? As debit all expenses and losses and credit all incomes and gains. So totally business transactions are classified into as cash transactions, credit transactions, and receiving benefits, giving benefits, and personal accounts, real accounts, nominal accounts. These are all are business transactions. The main object of every business organization is to earn profits. So every trader must know how much profit or loss made in a particular period. That is 12 months period. That is accounting period. But no trader can remember all these transactions relating to 1 year. So all the business transactions must be recorded in separate set of books. It is called bookkeeping. So bookkeeping means recording of business transactions. Recording of business transactions. Yes, totally the business transactions are in the form of as cash transactions, credit transactions, receiving benefits, giving benefits, as personal accounts, real accounts and nominal accounts. These are the as total types of business transactions. Yes, in bookkeeping all the business transactions are recorded in separate set of books. It is called bookkeeping. The methods of recording business transactions. There are two methods to record the business transactions, which are first one single entry system and double entry system. There are two methods to record the business transactions, which are single entry system and double entry system. Yes, in simple meaning, single entry means only one of the benefit either receiving or giving is entered. It is called single entry system. What is double entry system? Both the benefits are recorded. That is receiving benefit and giving benefit both are recorded. It is called double entry system. But as the business transactions totally as in the form of cash transactions, credit transactions, receiving benefits, giving benefits, and personal accounts, real accounts, nominal accounts. So broadly explained in single entry system as follows. Under this system, only one of the benefit, either receiving benefit or giving benefit of a transaction is recorded. Only cash transactions are recorded in single entry system. So cash and credit, total cash and credit transactions, of which only cash transactions are recorded. And then personal account, real account, nominal accounts, only personal accounts are recorded in single entry system. So real and nominal accounts are not recorded. So out of cash and credit transactions, only cash transactions are recorded. So in single entry system, all transactions are not completely recorded. So this system is also called as a single entry system, incomplete record of business transactions. Sometimes it may be a mixture of single entry, double entry and no entry. So this method is also called as unscientific method also. Next, double entry system. As under this system, all the business transactions, that is the cash and credit transactions, personal accounts, real account, normal accounts, all receiving benefits, giving benefits, both are entered. So all the business transactions are entered completely in this method. So it is a complete record. Yes. This method depends upon the basic principle of every debit has a corresponding credit and vice versa. So this method is also called as a scientific method. All the business transactions are recorded in a separate set of books is called business. But all these transactions entered first in a book. That book is called journal. So journal is a book in which all the transactions are recorded in which they occur. That is in chronological order. That is date wise. All the business transactions are recorded first in this book. So this book is also called as book of prime entry or books of original entry. Journal is a book in which all the transactions are recorded first in this book. So this book is also called as books of primary entry or books of original entry. The process of recording business transactions in journal is called journalizing. The process of recording business transactions in journal is called journalizing. The transactions recorded in journal as entries. So the entries recorded in journal is called journal entries. The entries recorded in journal is called journal entries. It is the format of journal. Yes, there is 5 columns. There is 5 columns which is date, particulars, LF means ledger folio number, debit amount columns, credit amount columns. All the business transactions are entered as date wise in journal as entry. Yes, before entering the transactions in journal, yes, we must verify the given transaction is a cash transaction or a credit transaction. Whether it is a cash transaction or a credit transaction, it should be noted 4 points. First one, yes, if the given transaction is a cash transaction or a credit transaction, verify yes the word cash is given or not. If the word cash is given in the transaction, it is a cash transaction. The word credit is given in the transaction, it is called credited transaction. But there is no information about cash or credit. Yes, identify or verify the personal account the personal account is given or not. When personal account is given, it is called credited transaction. This transaction is treated as credit transaction. If personal accounts are also not given in the transaction, it is called credited transaction. Yes, before entering journals as entry, yes, the transactions are classified which accounts are involved in each transaction. Suppose goods sold to Venkat for cash, it is a transaction. Yes, in this transaction, goods is a real account, cash is a real account. Both are real accounts. So the accounts, what accounts are involved in this transaction is goods, that is a real account, cash is a real account. Both are real accounts. So apply real account rule. Yes, debit what comes in, credit what goes out. When goods are sold to Venkat for cash, yes, when goods sold, goods are outgoing benefit. So yes, it is a outgoing. So what goes out credit? As per real account, what goes out credit? So goods are credit. And when goods are sold for cash, cash is a receiving benefit. What comes in debit? So cash account debit, goods account credit. So cash account it are to goods account. But where goods are appeared, yes, then purchase or sale to be written. Purchase or sale is to be written. It is a sale transaction. That is goods sold. So cash accounted are two sales account entries. Then next, goods sold to Venkat on crate. It is clearly mentioned that it is a credited transaction. As which accounts are involved in this transaction? As goods real account, Venkat personal account. So one account is debit and another is debit. Another is credit. First one, goods. When goods are sold, goods are outgoing benefit. As Venkat is a personal account, is a receiver. When goods sold to Venkat, Venkat is receiver. So Venkat account debtor. Venkat account debtor because personal account debit the receiver. So Venkat account debtor to sales account. Next, goods sold to Venkat. Goods sold to Venkat. As there is no information whether it is a cash transaction or credit transaction. So identify as personal account is given or not. As there is a personal account, that is Venkat is a personal account. As when personal account is given, as it is treated as a credited transaction. So which accounts involved in this transaction? Goods account, real account, Venkat, personal account. So goods account, personal account, goods account, real account, Venkat account, personal account. As per personal account, Venkat is receiver, debit the receiver, Venkat account debtor to sales account. And next one, goods sold for cash, goods sold for rupees 6,000. There is no information about cash or credit. So as verify personal account is given or not. No personal account is given. So it is treated as a cash transaction. So the given transaction is goods sold for rupees 6,000 for cash. So cash is a real account, goods also real account. Both are real account. As per real account, what comes in debit and what goes out credit. When goods sold for cash, cash is the receiving benefit. So cash account debtor. As when goods are sold, goods are going benefit. What goes out credit. So as cash account, sales account credit. Then cash account debtor to sales, Venkat account debtor to sales, Venkat account debtor to sales, cash account debtor to sales. These are the journal entries. As if every journal entry must be a narration. That is being goods sold for cash. As next to being goods sold to Venkat on crate. Being goods sold to Venkat on crate. Being goods sold for cash. Yes. Thank you.